Welcome to the Explainer. Today, we're going to decode one of the most important, but honestly, one of the most misunderstood financial documents out there, the cash flow statement.
So let's just jump right in with a puzzle that really trips a lot of people up. Can a company report record-breaking profits, be the talk of the town, and yet still go bankrupt because it runs out of actual cash? How is that even possible?
Well, the answer is a big, resounding yes. You see, profit on paper is not the same thing as cold, hard cash in the bank. And the document that tells the real story, the one that follows the actual money, is the cash flow statement. To see how this works in the real world, we're going to use a real company, Honda HCAR Limited.
To really get to the bottom of this, we're going to follow the money through the three main sections of the statement. Think of it like a three-act story that shows us exactly where a company's cash is coming from and where on earth it's all going. Okay, first up, operating activities. This part is, the heart of it all. It answers the most basic question. Is the company's core business, for Honda, that's building and selling cars, is it actually generating cash? Now, before we dig into the numbers, there's just one simple rule you have to remember. If you see a positive number, that's cash coming in. If you see a number in brackets, that's cash going out. Simple, right? But it's absolutely crucial. So for Honda in 2022, you see this massive inflow right at the top, over 1,200 crore rupees from their operations. But right away, you can also see some pretty big outflows for stuff like paying income tax and these royalty fees.
So what in the world are royalty fees? Well, think of it this way. Honda Atlas Pakistan pays a fee to its parent company over in Japan. Why? For the right to use that globally famous Honda brand. All its technology, its patents, the whole shebang. It's basically the cost of using that powerful name. All right, so after all the cash in and all the cash out, what's the bottom line for their main business? Well, it generated a super healthy 650 crore rupees in cash. That is our first big clue, a huge green flag that the core of the company is strong.
So, if the main business is cranking out that much cash, what is Honda actually doing with it? And that brings us right to our second act, investing activities. This is all about how a company spends money today to hopefully make a lot more money tomorrow. And believe me, Honda was busy. They spent 292 crore on physical stuff like new factory machinery. They spent another 50 crore on intangible things like software licenses, and they also did a lot of buying and selling of short-term financial investments. Whoa, so when we tally up this whole section, the final number is a massive negative 865 crore rupees. That is a huge cash outflow. Now, when you see a number like that, a cash drain of 865 crore, your internal alarm bells might start ringing. That is a lot of money flying out the door. So the big question is this actually a bad thing? And here is the big twist, the key insight. In this section, a huge negative number can actually be a very, very positive sign. This isn't a loss, it's a strategic investment. Honda is putting its cash to work, spending it on growth that it expects will generate much bigger returns down the road. So, with all that money being poured into investments, where did it all come from? Well, that takes us to the final piece of our puzzle, financing activities. This section shows us how a company gets its fuel, whether it's by borrowing from lenders or raising money from its owners. And we can see a few different moves here. Honda took on 110 crore in new long-term loans, but at the same time, it paid back 24 crore of its old loans. And, this is a big one for investors, it paid out 64 crore in dividends to its shareholders. When you net it all out, you get a small positive inflow of 21 crore rupees. And what that really tells us is that the company didn't have to rely on a bunch of new debt to fund its day-to-day work or those big investments during the year. All right, we have seen all three parts of the story. Now it is time for the grand finale. Let's put it all together and get the final verdict on Honda's cash situation in 2022. So you take the 650 crore that they generated from operations, then you subtract that huge 865 crore they spent on investing, and then you add back the small 21 crore they got from financing. And what's the final answer? The company's total cash balance actually went down by 193 crore rupees. But this is why context is everything. That single number doesn't tell the whole story.
What it really shows us is that the core business is a cash machine, and they're taking that cash and reinvesting it heavily into future growth. Plus, they're doing it all without taking on a ton of new debt. So that decrease in cash, it wasn't a sign of trouble at all. It was a sign of ambition. And it's so important to remember that even after that 1900 core decrease, the company was hardly strapped for cash. It ended the year with a massive closing balance of about 1,300 crore rupees. That is a very strong, very secure financial position.
So just remember this. Profit can sometimes be an opinion, something shaped by accounting rules. But cash is a hard fact. And now you have the tools to look past the headlines and understand the real story that a company's cash is telling.